Well, good morning, everyone. How are you guys this fine Monday morning? You'll have to excuse me. I seem to be catching a little bit of a summer cold. And no, the world is not coming to an end. The markets are just crazy this morning. We just had the opening bell. This is very characteristic of some of the fall sessions on a Monday morning, where the market opens and we see these insane movements, higher or lower. This morning was lower. You can see right here, if you had yourself set for one of these short positions early on, this is on our Eagle, look at that insane move right out of the open. All this right here within a second, boom, the market just fell. Huge vacuum on the buy orders, and the sellers just forced the market down in a huge way. I'm just curious, how big of a move is that? To where we are now. Ooh, look at that. That's almost $2,000 per contract. Insane. All right, well, that's on the Eagle. There's no question the market is in a downtrend today. Look at from the London Open, a little bit of choppiness, even a little bit of a rally, and then the market just started to decline. This is the NASDAQ, of course. So a huge gap to the downside. And now what? Look at the orders here. 70 buy, 1 to the sell, 50 on the buy, 70. Wow. This is very bizarre. Look at that, 152 on the bid, 1 on the ask. This can't be right. 170, 180 on the bid, 1 on the ask. $216 on the bid, 1 on the ask. Is that possible? Oh my gosh. No, this can't be right. There must be something wrong here. 370 on the bid. Okay. Did my charts just lock up? Oh, thanks, Charles. Yeah, they're lock limit. Of course. Yeah, no, mark their lock limit lower. Of course. Hold on a second here. Well, we're going to have a very short trading day. I don't think in all my time trading I have ever seen the NASDAQ or any of the stock indices locked down. I didn't think, is the S&P still trading? Yes, the S&P is still moving. I didn't think the NQ had a limit on the front month. I'm just checking the contract specs. See here, you can look to the CME and you can find the contract specs for price limit. Let's find this out together. Oh yeah, they did put a lock on it. the front months never used to have one, so I guess I missed that announcement. So the NQ September contract, 7% down. Oh, well, I guess they've added a few things to keep the markets from blowing themselves up. The circuit breakers. All right, well, here, let's flip over to let's see what's going on in the YM, if the YM is moving. Jim says the YM is still moving, but the Russell and the NQ both seem to be locked. So let's see what was going on here. We had a huge sell-off too, I imagine, out of the open. Yes, we did. So the open right about here. Oh, a little bit more volatility. This is all developing in a matter of seconds. The market spins lower, hits 152.80 and starts to rebound. Ooh, this is, you know what, folks? This is the kind of day that you should really consider just moving into sim mode. It's not that there aren't opportunities today. There are going to be some insane opportunities, insane being the operative word. Especially if you're a small account trader, this is the kind of day that could literally wipe you out. Yeah, Mark says, I'm already there, moved into sim mode. Yeah, like Jim says, they're pockets of error here. Let's take a look here at the Raptor, because I've got the Geiger counter on the Raptor. Wow, there's no clue here as to what's going on. It's quite literally a crapshoot. This is like our crude inventory days, right? You can identify the highs and the lows, put a buy order in above and below, and keep your fingers crossed that you don't kill yourself, financially speaking. Oh, this is crazy. And this is all within the first 10 minutes. Yikes. Yeah, like Jim says, the NQ is dropping about 30 points in a microsecond, which is exactly what we're watching here. Insane rallies, insane declines. It's fun to watch, but not so easy to trade. You know, in hindsight, we can look back here and we can say, yeah, our signals were solid. We had a first micro-macro cross signal here. Macro pullback signal. Oh, now into yellow bars, so wait for the 4-arrow consolidation. We had a late filter entry here and a trend change signal combined. Great move. Yeah. Where are we on our support and resistance line assortment? Look at how deep we are. We've only got 1, 2, 3 zones below us, at least as far as the YM is concerned. Kai asks, how often is something like that happening? Very, very rarely. In my 20 years of trading, I have never seen a lock limit day on a stock index. We'll get active days. You know, we'll get days like this where the market, we'll get little hops like that, but we very rarely will see the market explode uncontrollably one way or the other. You know, like this would be a very aggressive buying day. Oh, it looks like the NQ is moving again, so let's go take a look at what's going on in the NQ now. They change the rules all the time. Well, not all the time, sorry, that's not fair. They do change the rules from time to time about limits, and like I said, I wasn't even aware that they had put a limit on the stock markets. Normally, the stock markets don't have limits to them. At least not the front month. Very rarely will the front month have a limit on it. It's kind of fun to watch, but it's a little frustrating also because we can't trade this. If you want to goof around, you know, if you just want to play the what if game, go ahead and, you know, look at your ego and say, well, see, look at this insane move. The insanity moving lower, the insanity moving higher. The thing I take solace in is look at how solid these signals were. Red bar, buy signal off of the hard edge, boom. Possible rule of 3. So like I say, I am in total sim mode here, and there is no way I would suggest this to anybody. But we've got a nice little bracket, a nice little range here that you could do an OCO on. Now, I'm insane for not having a stop in place. There we go. Even a stop like this. Oh, must have hit the break even trigger. So I need to disable my stop. Bring it down here. floundering now. All right, so let's see if we can. We're back at break even. I forget about that. All right, let's see if the buyers can come in now. There come the buyers. Notice, the lack of follow through on a breakout, right? Normally we would get our test, retest kind of thing. I suppose this was the retest here on the breakout. Failed. Now the market's going to try to do the same thing the other side. It's going to come down, test, retest, if it can get through. At this stage now, I would consider going with something a little bit more aggressive, maybe like a parabolic or a bar high-low. Of course, I need to let the market get above here a little bit because my auto break-even trigger has already been hit, which in hindsight, it might have been okay to let it take the market at break-even. But if nothing else, we can practice our stop strategies. So I would probably have my trade sitting right about here now, where this is the do or die part of the trade. The market either rallies or it's going to reverse and take me out. So the buyers are either going to maintain control or the sellers are going to take it away, in which case you'll probably see the market fall considerably lower. This will be interesting. I'll have to talk to Mike Filigera later to see, because he's been trading the NQ forever also. Oh, there we go. We got tagged at break even. I suppose that was lucky. Forgot about that break even trigger. Darn it. Oh well, here, we'll see whether or not they would reverse and hit the parabolic. If this bar goes lower, there we go. I would have got tapped on the parabolic anyhow. What I was going to say though is Mike is the stock trader with DTS, and he would be watching Apple and Tesla and Netflix and all these types of stocks, and they must be just going crazy right now. Also, actually, why don't we, I think I've got Apple in the mix. Let's take a look at Apple. Neil says, I just got here. Crazy morning. What is a lock limit day? Most of the commodities markets, most of the futures markets, or I shouldn't, will have a limit as to how far the market can move a particular day. The grain markets will have a limit. The meat markets have a limit. Those are the most common. Occasionally, you will see the market trade so fast one way or the other that the exchange will actually halt trading. Oh, maybe what they do on the stock indices is they just hold it for 10 minutes. Sometimes they'll do that. And the whole idea behind a lock limit day, either higher or lower, is very much like a run on a bank. You know, you can figure out the downside if the market is lock limit lower. Think of it like a run on the bank, right? If you're holding Apple or, well, maybe not Apple, you're not going to throw away your Apple stock, but if you're holding stocks and in your portfolio, so look at the Apple market go nuts here on the Hawk. The other three tools haven't loaded yet, but it'll be just as crazy. And all of a sudden, the NQ falls off the map like it did this morning. The whole idea behind a lock limit is that you don't phone your broker and say, sell everything. Sell everything, buy gold, or, get me out of the market, because of course that has the potential to ruin the economy. Maybe not ruin the economy. Not everybody is going to sell out, but I want to say that's kind of what happened in 1929, but not really. 1920, the big crash of 1929 had lots of other things going on, but it can lead to an economic meltdown if you get uncontrolled selling. Uncontrolled buying is just as dangerous. So they'll have, you noticed on the CME here, they had limits to the downside on the CME webpage. These were limit down only. So they only have limits to the downside. In the stock market, they don't have limits to the upside because it's less likely to be uncontrolled buying to the upside. In the futures markets like the grains or the meats, there can be uncontrolled buying to the upside, and they will lock the market down for the same reason, or a similar reason, is that they don't want the buying to become so overinflated that they lose all perspective of the value of the commodity. If you've ever been in a real estate market where there's been a buying frenzy, as was here on Vancouver Island about 10 years ago, there were bidding wars on properties. A house would be listed for $300,000 and people would come in and offer $350,000. See, look at this. My poor computer can't even load the data fast enough. It's so insane this morning. So it looks like what they do in the stock market anyways is if the market reaches the limit for the session on the downside, it looks like they halt trading for 10 or 15 minutes and then they let trading resume. And if the bottom would fall out again, well then they would halt it once more. I apologize. I didn't realize that they had instituted that on the stock market. If you were watching the three different stock markets, say like the NQ, the E-mini, and the YM, the big three, and you saw the NQ lock limit down, and you knew there was a 10-minute pause, and you saw the E-mini and the YM soaring higher, just like what we saw this morning, you could pile on a buy order with everybody else. No guarantee you would get filled anywhere half decent. Kai is asking, how long do lock limits last? It looks like in the stock market, it's a timed limit. So I'll have to investigate a little bit more. It looks like they hold the market for 10 or 15 minutes and then they let it resume trading. In another futures market that would have a lock limit like corn or wheat or soybeans or feeder cattle or live cattle or hogs, the limit would last the day. They would never lock limit longer than that. But it is not unusual to see a market go 2 or 3 limit days in a row. That happened in feeder cattle last year. And fortunately for us, we were on the right side of the trade. We saw the move coming well before it happened, but feeder cattle went lock limit down 3 days in a row, and by the time the market finally released, we had made like $13,000 per contract, which is great, but imagine yourself if you were on the wrong side of that trade. All of a sudden you wake up 3 days later, you're $13,000 poorer. So It is very much a two-edged sword. Jim's throwing me some advanced decline numbers here, I think just to highlight the insanity. Advanced decline, 32 buyers, 2,500 sellers. That's just a touch lopsided. Yeah, to see Tony says last limit day for me was trading bellies so long ago I can't remember the year. Yeah, pork bellies would be a market that would routinely lock limit, especially at certain times of the year. Pork bellies were very, if you knew the seasonal, I can't say seasonal cycle, pork bellies used to follow those very closely. Now, of course, they don't. The demand for bacon is pretty much the same year round, but they used to have quite the seasonal cycle to them. Okay, I was hoping the Apple chart would load a little bit faster than it did, but you can see the insanity here on the Apple chart. Look at how quickly these are unfolding. All these bars, these are all seconds down here across the bottom. We had to wait a long time for this signal to fire. It took a whole 20 seconds for that one. So you can see it's very much like what we just saw in the NQ. Huge decline lower. I'm not that familiar with the stock market, but I don't believe stocks have a lock on it. All right, let me pull this back to the NQ now. Where'd you go, NQ? All right, I see there's a few questions here, and let me just get to them. Kai's asking, how did the lock limit happen? Well, it happens when the sellers are just steamrolling. In this case, the sellers are steamrolling the buyers. Don't forget, futures is a zero-sum game. Excuse me a moment. I'm fighting off this cold, so pardon me. Futures is a zero-sum game, so for every buyer there needs to be a seller, and vice versa. For every seller there needs to be a buyer. So let's say, well, where did the NQ leave off? Well, we'll say roughly it left off at 4,200. All right, so that's where the buyers and sellers were evenly matched. They had buyers at 4,200, they had sellers at 4,200. They were exchanging contracts. Buyers thinking it's going to go higher, so they're buying. Sellers thinking they're going to go lower, it's going to go lower, so they're selling. The market opens Monday morning. There are no more buyers at 4,200. There are no buyers at 41.99 and 3/4. Neither are there buyers at 41.99 half. There's no buyers until, this is a little bit of an exaggeration, but 3,900. So you have a 200-point gap. It's like all of a sudden the buyers will say, it's just like if you're at a flea market, right? And you see something you want to buy, some widget on the flea market table, and the guy's got a $10 price tag on it, and you say, I'll give you $5 for it. It's the same thing just happened in the NASDAQ. The NASDAQ left off at 4,200, and the next morning the market says, I'll give you 3,900 for it. So you have a huge vacuum between the sellers and the buyers, and you've got sellers with market orders. That's the thing about Monday morning, where you got to really wait for the dust to settle, especially Monday morning. Opening range can be insane because there will be an insane amount of market orders just waiting to buy or sell on the open. So let's say you're a seller, you instructed your broker to sell on the open. Well, the broker's going to get you the best price he can, but if the only price offered is 3,900, guess what price you're going to get? You're going to get 3,900. Well, actually, realistically, the broker's not going to work that hard to get you the best price he can. He's going to enter your order into the system. You're going to get 3,900. It's not like the old days where the brokers might actually sit on your order a little bit, try to get you a slightly better price. The markets are so liquid now. And markets like the NQ and the E-mini, of course, are all electronically traded, so the orders just go in and the computer fills them. And if the market hits that limit, then all trading halts. And it's essentially the same thing as a circuit breaker in your breaker panel. It's just to keep the markets from blowing themselves up. Avoid a run on the market. Okay, I'm just looking to see whose questions I may have missed. Oh, and by the way, if you ever catch yourself on the wrong side of a limit move, it can be very scary because, of course, you have no control. You're not able to exit your position, so you're stuck there. Make sure you have a contingency plan in place. And that contingency plan, you need to have a good working relationship with your broker. And you need to get your broker to start buying or selling options for you, because the option pits will still be trading even though the market might be lock limit. So if you're, say, in a soybean trade or a corn trade and the market locks limit against you, the option pit will still be trading. So it'll cost you a few extra dollars, but it'll make your loss a whole less painful if you purchase some options. That's one way that you can offset your position and lock in your loss. And your broker can walk you through the details, but if you have a good working relationship with your broker, call them up one day and say, I want to make an appointment with you, after hours, of course. And I need to talk to you about contingency plan because the market that I'm looking at has a limit on it, and I want to know what I need to do to protect myself if the market locks against me. That would be a very prudent thing to do. And most brokers will know exactly where you're coming from, and they already know what to tell you. They'll say, okay, well, if the market locks, we'll get into an option trade. We'll offset your contracts with a put or a call or whatever the case will be. Oh yeah, like Jim says, imagine the price of those options with all the volatility. They just went through the roof. But it's still going to be cheaper than getting stuck on the wrong side of a trade. It's going to be an expensive day no matter how you slice it. Jim says that the first half hour range is 630 points on the YM. The NQ looks just as insane. Look at that range. So they opened sometime during the open of the first half hour. This was the low, this was the high. All right, they're settling in a little bit. Yeah, they're still hopping a bit. Like I said, the only thing that you should do today is go into sim mode. You can horse around a little bit. You can see if you can capture one of these moves if you're fast enough. The Trailblazer would be kind of helpful for that because it, of course, has the one-click entry system. And I happen to have the Trailblazer here on the Raptor. So we just had a failed sell, throwing a buy order. And let's swing low. So we hit our break-even trigger. You can't even see this, can you? The chart is so scrunched up. And now we're contending with the highs here. Right? These highs right there. So once again, the market very congested, very channeled. But like I've been saying all morning, this is not a market that you can trade. You can play around a little bit, treat it like a video game, but that's really all you can do. So now they're going to try the downside again. So they're just churning and burning. Ay, 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 ay. Yeah, they're just thrashing about here. Oh, well done, Michelle. Michelle got caught a lucky break. She says, I got caught in the limit down on the NQ, made $3,000. Oh, you got lucky. You better go buy yourself a lotto ticket today, Michelle. Josh is asking from Trade Manager, is there a way to preset profit target when pressing market order? No, not on the Trade Manager, only on the Trailblazer. That was part of the reason for the Trailblazer is it's a one-click entry system. So you preset your stops, you preset your quantities, or pardon me, you preset your profit targets. Your stops will default to whatever stop strategy you happen to be running. So when you click the buy market or sell market, you get everything laid out that way. But with the Trade Manager, if you click your buy or sell market button, it will default to your preset targets down here. If you do not have targets preset or your stops enabled, I believe, here we'll sell it this time. Yeah, so you don't get a stop. So it's just a little quirkiness that the Trade Manager has compared to the Trailblazer. Yeah, good idea. Kai says, by the way, can you show me the high probability signals on the Falcon? Why don't we do that? Okay, I'm going to have to roll over here a little bit. All right, let's start with the most basic of Falcon signals, the trend change signal. The trend change signal occurs when the trend line changes color. Here, we'll go to this one. This one's perfect down here. So the trend line, in this case, the trend line is red, and then it changes to green. Your trend change signal is essentially the first signal that occurs after everything comes into sync. So very much like the first micro-macro cross, now we've got green bars, green trend line, green filter, green signal. One thing I do like to look for with the trend change signal, however, is I like to see this. I like to see the market rally, and this is the portion that changes the trend line color. Then I like to see the market come against that move, and then in this case, the buyers recapture the market. So this tells me, hey, the buyers had enough energy here to change the trend line color. The sellers fought to bring the market back, to bring the trend back. Then the buyers overwhelmed the sellers and produced a buy signal. This is a trend change signal. It is a high probability signal. The next high, and you see we have another trend change signal right here. Right, so we have our up, down, up portion. The next highest probability signal, or another very high probability signal, is the late filter entry signal. It's pretty easy to identify. It occurs when the trend line goes out of sync and then comes back into sync. But the whole time that's going on, the trend line never changes color. That's very important. You generate a signal, everything is in sync again. That is a very high probability signal. Here is another one. The filter goes out of sync, trend line never changes color. Filter comes back into sync, you print a signal. All right, so once again, everything has to be in sync, but with the late filter entry, the filter happens to go out of sync for a little while before coming back into sync. The third signal, excuse me, the third signal is the early trend change signal. Now this one is a little bit more aggressive because we don't have the trend line changing color early like this, we don't have the trend line changing color with the move higher, the move lower, and then the recapturing of the new trend. Rather, all that tends to happen before the trend line changes color, and then the signal prints just as the trend line is starting to turn over. But if you're looking for that characteristic test of the extreme, sometimes you can spot the early trend change signal. So now our next bar here produces the signal. The bar is in color, the trend line is the right color, the filter is the right color, and then we get a nice little move lower. Now the thing to remember with the early trend change signal is you don't want to be too quick with your stops. Why? Well, because the early trend change signal very often develops into a proper trend change signal. This is what I would call a proper trend change signal. So now we have this down portion. Here's the up portion. Now we're going to wait and look for the down signal. And there's the down signal. So here's the proper trend change signal. Sometimes these early trend change signals will tend to retreat a little bit deep. That's why we don't want to roll our stops too quick in case the market tries to really test the highs here before heading lower. Now the early trend change signal, like the red bar buy, green bar sell on the hawk, you don't necessarily need to trade. You can use it simply as an early warning to be alert that maybe we're going to get a proper trend change signal, which we did right here, and you could possibly cover it above the highs, and then voila, you go ahead and hit your profit target. All right, so those are your basic hawk signals, or pardon me, falcon signals. There is another signal that we call the double dot signal. Now this is a counter trend signal. It is a signal that you have to be very subjective with because you can get burned. All right, we're going to pretend. This isn't a double dot signal, but we're going to pretend here. Because the important thing about the double dot signal, we're going to pretend the double dot signal developed right here. Okay, so we're going to pretend we got two warning dots back to back. What the double dot signal shows us is it shows us impending weakness in this case. And again, we're pretending here because this isn't an ideal setup. But what will happen is you'll be in an uptrend like this, and all of a sudden you're going to start printing sell dots, sell warning dots. So you might get one here, and then a little while later you're going to get two back to back. Well, the two coming back to back is telling you that there's a lot of weakness in the market. You see here we actually had three, 1, 2, 3, all in a row. But the thing that you want to see with the double dot signal is you want to be able to look back into the history of the chart, and you want to be able to tie it in with some other reaction. You want to be able to look back in the chart and say, oh, well, last time we got up to this level, the market made a nice little move lower. Therefore, it's likely to do again so this time. You hope. As I said, the double dot signal is very much a counter trend signal. The only nice thing about the double dot signal is that you can cover it above the highs. So if you feel really strongly about the resistance area that you've encountered or the support area that you've encountered, you can go ahead and you can try to short it early. I would probably recommend going all in, all out because it is a counter trend move. You don't necessarily know how long it's going to last. And in this case, let's see, did the market get down there? Oh, there you go. Just got low enough to find our profit objective. All right, so that's a double dot signal. But like I say, with the double dot signals, like the other counter trend signals, you don't need to trade them. You can simply use them as an early warning that maybe the trend might be turning over. Now, trend change signals develop mid-trend also. You see, here we have a trend change signal. The trend line goes from red to green. We have our characteristic up, down, up pattern, and we produce the buy signal here. Here is a late filter entry signal. Here is another, well, yeah, this one came a little bit late. Here's also a trend change signal. Here's the up, here's the down, and then you can see we have several ups, none of which seem to ever get triggered. I would not be overly aggressive on a trend change signal to the downside. And why? Well, because once again, you need to take the context of the market into consideration. So if I was looking at a chart like this, and then all of a sudden I had the market come up like this and come back down and produce a sell signal right about here, I would be less inclined to take it with, at least with my full risk allotment. Why? Well, because the market has been in an uptrend. Now, that's not to say the trend won't reverse, but if you have a market that seems to be honoring a trend, you should try to stay with that trend as much as possible. Now, it is true that we would have had to tested the extreme at this point, and that there's a chance the market's going to turn over, but rather than enter on the hash market, I might enter down here. Or I might wait for a second push on the entry. What's that, you say? Well, the second push entry is when we let the market come down. It kind of engages where we intended to enter from. Then we see whether the market will retreat from there. And very often it will retreat. It'll go up a little bit. Okay, at this point, I would enter my trade where I intended, say just below the low of that bar. And then if the market gets the momentum and drifts back down, well, then it will bring me in, and then it is more likely that the trade will actually continue on in my direction. The second push entry is very helpful in the Falcon and the Eagle also. Not so much in the Hawk, I find. The Hawk, you more or less gotta commit to the signal. And of course, we have some pretty high probability signals in the Hawk. I'm curious here now, how many ranges do we have left? Oh, we made up a little ground. Look at this, we're almost recovered to the primary support. Wow, what a crazy day. All right, Kai, so those are your basic Falcon signals. Yeah, Neil says he doesn't have a TV in his trading room. He says, what are they saying on MSNBC? They'll find something to account for the meltdown. But it's just crazy. Like, they've recovered everything they've lost this morning, and then some. The NQ is pushing higher. Jim's giving me an update here on the advanced decline. We now have 120 buyers and only 3,000 sellers. Yeah, Josh says, but it's hard to enter the trade on the signal line. It's impossible today, Josh. It's impossible to enter the trade on the signal line. And if we did, see here we have a trend change signal in the works, right? We have our down portion, trend line changed color. Here's the up portion. I could anticipate that we're going to get a sell Oops. Let's try this. I can anticipate that we're going to get a sell, and I could park an order like that. But let's see how badly we get slipped. So we're, oh, all right, they're retreating a little bit. We'll try this again. So I'm anticipating, there we go, there's the sell. So 40.94, let's, oh, they're going the wrong way. I'm trying to make a point here, NQ. I'm trying to see how bad they're going to slip us. This isn't a sell signal, by the way, folks. This, technically, I suppose it's an early trend change signal now because of this little green portion. Oh, not bad. They only slipped us a tick. I thought we were going to see at least a 2-tick slip. But like I said at the beginning, a day like today, you should not be trading. It is just too volatile. You're just asking for it. If this trade works out, it's more by luck than anything. Yeah, Joe says, how was golf? Yes, I golfed my brains out and I played fantastic. It was a very good weekend. Yesterday I couldn't putt to save my life, but man was I striping the ball. Very tricky greens too. I think they sharpened the edges of the cup with a file because nothing was dropping. Yeah, better than Tiger, Neil says. Well, on par with Tiger. I think he and I could have played even up yesterday. Oh, John too caught a lucky break here. He says, what a wild ride today. My charts froze. Called Ninja support. They didn't know what was going on. Finally looked at Bloomberg to figure out that trading was halted. I was fortunate to use the Raptor today and made $949. Well done, John. Good for you. Stop trading for today. Yes, I think that's probably an excellent idea. Mark Bag 1700 in Sim. Well done. Yeah, this is just nuts today. They might settle down by the afternoon. They seem to be getting a little calmer. But no sooner do I say something like that than the charts will explode. See, there they go. Yeah, we're getting a little bit of a sell-off here again. I'm wondering if all this recovery is just maybe spurred on by some profit taking and it's not actually a true recovery. They've got some crazy ranges to trade. Four arrow consolidation here in the hawk. 1, 2, 3, 4. And there they go. Working on a trend change signal now on the Eagle. It has since turned over. Nice little test to the extreme. Nice little retest on the downside. Do you see that right here? Break, retest, trend change signal. We should get another one. Oh, now they're coming back with a red bar buy of all things. All right, so there's our trend change signal. I would, oh, come on now. I would probably take it, well, to the hard edge at least. And I would like to see it enter below the low. We're now in sync with our ATR, so this is technically our signal bar. So they slipped us a couple of ticks on that one. And let's just see if they're going to run this one out at all. All right, so they slipping a little bit lower. I'm going to try to hold the stop just a little bit back. There we go. Yeah, like Jim says, high frequency trading at its best. That's exactly what you're seeing here. Churn and burn. Mark says on Bloomberg TV last night, before he went to bed, they were calling for the market to be weak this morning. The Dow was down 300 points last night, he said, when he went to bed. Yeah, I saw that. I didn't watch Bloomberg, but I had an update as well that the markets were very weak going into last night's Globex Open. Yeah, look at these retracements. That's just craziness. Well, we would have hit our high probability profit target. That's the good news. And now we're just goofing around a little. Come on, take out that low. No, they're going to bounce off of the low, so maybe it's time to save a couple more dollars. Here we go. Come on, get down there. Who's your daddy? There. Come on, come on. So I think somebody was asking what's going on in crude oil today. Can you believe it? Crude oil trading at $37 a barrel, $38 a barrel. Unreal. Unreal. If you had told me a year ago that crude oil was going to be at below $40 a barrel, I would have laughed in your face. And of course, that's really hard on the Canadian economy because it's oil exports is a major resource for Canada. So thank goodness the stock indices trade in US dollars. Kai says, or asks, how do we know the lockdown is over? Well, the trading has resumed, right? The trading would not resume if it was a lock for the day. In feeder cattle, a few years back, when the market went lock limit against us, 3 days, or in our favor, sorry, not against us. When the market locked limit for 3 days, the exchange actually altered the limit rules to prevent the market from locking for a 4th day. So The exchanges are here to facilitate trade. They're not going to allow the market to be locked any longer than it needs to be. The only time it locks is it's a preventative measure to keep the economy from melting down. In fact, I do believe the U.S. government even has a plan in play that if the market ever free falls, the U.S. government goes in and buys it all up. So that if there was ever a 9/11 type scenario, well, the markets would be shut down. On 9/11, the markets were shut down. Well, aside from the obvious reason, they were shut down to keep the economy from melting. But there are fail-safes in place to help protect the economy. Yes, that's right, Neil. The plunge protection team. Thanks. I forgot the term they use for that. That's exactly right. Kai is asking, will it be safe to continue trading tomorrow? Probably. It looks like they're getting it out of their system today. If this were a grain market or a meat market, I would say no. But we wouldn't be trading anymore. So let's say we were trading soybeans and the market locked limit up. I would not trade Tuesday because I have no idea which way the market's going to go. Sometimes it will lock limit higher again, in which case I couldn't trade even if I wanted. Sometimes it will reverse against the lock limit. Normally what happens, from my experience, what I've seen, is that let's say a market locks limit higher. It will lock limit for 2 days, and if it unlocks the third day, it will make a major reversal against the limit move. And if you think about it, it makes sense. Because if you're a buyer, or pardon me, if you're a seller and you're stuck on the wrong side of a limit move higher, when the market finally unlocks, it's going to have an avalanche of sell orders hit the market. So you're going to have all these buyers who have all this profit locked in who want out, plus you have all these sellers who have been dragged along unwillingly, and you're going to have just a mountain of sell orders hit the floor. So when the market finally unlocks, you're going to have a huge move against the limit move. Same thing, but the opposite if the market locked limit down. You're probably going to see 2 days lock limit. Occasionally you'll see 3, but 2 tends to be the norm, if there is such a thing as a norm for a lock limit day. And then when the market finally unlocks the third day, or sometimes the fourth day, you're going to see a big spike higher as the market reverses against that limit move. Now, when I say, big spikes higher or lower, it's not going to recover the entire limit move. Otherwise, you'd have a lock limit going the other way. But you're going to see some very aggressive counter trend movement. So the way the market is moving right now, I really don't know. Like, it's actually bullish today in spite of the lock to the downside. The NQ overall, and I don't know if we're going to see enough of a picture here. Let me build you a daily chart. Chart, here we go. Okay, so here's the NQ on a daily chart. This is where the market opened, somewhere down here. So the market's actually been very bullish today, when you consider that it opened somewhere around 3,900 and it's trading back near 4,100. That's a huge rally, huge rally. So I guess what I'm saying is it might be safer to buy. Is that what I'm saying? I don't know. Crazy, crazy day. The market does need to recover a little bit though, because we have this support area that we need to retest. Right? They broke down. You're going to see the retest and possibly a move lower. It's going to get a little messy though. It will give the talking heads something to talk about though. Good question, Kai. Kai asked, does a lock limit on a index market affect the other futures markets? Let's load gold up here just for kicks. I bet you gold took a little bit of a hop to the upside when the NQ locked down. Oh, there's just so much activity, my poor computer can't even load. Sometimes what you can do too, if you ever find yourself in a lock limit day, let's say you're trading corn and you get locked in corn, or actually soybeans will be a better example. Let's say you get locked in soybeans. You can take the opposite position in something like soybean meal, or perhaps even soybean oil, which are related markets, and they tend to follow the big market around more or less. Soybean meal tends to follow a little better than soybean oil, which sometimes is the black sheep and moves the opposite direction. If you get locked limit in corn, and let's say wheat is still trading, you can take the opposite direction in wheat to protect yourself. And it's essentially what you're doing is you're essentially spreading your trade. You're hedging your trade. It's not a natural spread, but it will still help offset your losses. Like I said, you really need to, this was good that this happened today, because you really need to sit down and, have a cup of coffee, sit in an easy chair, and just let your mind wander a little bit and think about your options, how you would handle a situation like this. And then call your broker. All right, let's see what's been going on in the gold market. So out of the North American Open, we had, well, gold not quite as volatile as I thought it might be. So we did see a little bit of a spike here. When the index markets were falling, gold took a little bit of a rally. I thought that would be more substantial. And then gold kind of in a little bit of a tailspin here. That must have been when the stock market was rallying. Gold and the stock market do tend to move opposite each other. Let's see about the 30-year bond. They say the bond traders are the smartest traders in the world, so it will be interesting to see whether the bonds were as fanatic as the stock market was. So here was the open. Yeah, see, the bond traders weren't convinced. They took the opposite side, but look at this session. It's much more subdued. So the bonds retreating while the NQ and the E-mini and all the others have been rallying. And now it looks like the bonds might be coming back with a red bar buy signal. So if the bonds are going up, that means that the stock market is probably going to go down. Probably. Probably, not definitely. Yeah, just insane ranges here, insane chop. So much so my charts don't even want to cooperate. There we go. Well, it is actually getting a little bit smoother. You'll know when the market is a little bit more normal when you stop seeing those, or well, when you stop seeing this. These bursts of prices where you get a half a dozen bars unfold within the space of a second. That is not normal. Right? If you've been watching the charts for even a week, you know that's not normal. Normally we see a nice little progression, either higher or lower. We don't see just an explosion of bars. Yeah, good call, John. John says I'm probably not trading for the rest of the day. Good call. If you are trading, like I said, if you happen to find yourself in your office and you're going to learning mode, turn on the sim, and I don't care if you post a huge number on the sim profits. Don't start bemoaning yourself and saying that, darn Eric, I shouldn't have listened to him. I should have traded real money. Because chances are you can also post a very big losing number. But take a look at how the signals unfold. See if you can spot them. Like here was a green bar sell. And then we had the test of the extreme and the failure. Here's the nice result from that move. And maybe if nothing else, you'll get a little bit of confidence in your signal. But, quite honestly, I don't think you want to mess around with it too much. Using a golf analogy for those of you who might be golfers, I think it was Ben Hogan who said he never practiced in a crosswind because you would never get a true indication of his ability. That's kind of the same what's going on here today. You're not going to get a true reflection of your ability because we're trading in a crosswind. The market's just on crack. Oh, good idea, Kai. I never thought of this. Sorry. Kai asked, can you post the cheat sheet for the birds on Facebook? Yes, I will do that. And you're also welcome to email me, and I can send you what I have. And I don't think we're going to see any reasonable trading this morning. It looks like the market's going to continue to plod higher, even though it is, well, I guess it is a little bit more bullish. I was going to say it's still very weak, but that opening gap is really throwing a wrench into stuff. I think we're going to call it a day. I know it's a little earlier even than usual, but there's not much point in hanging out here. We're not going to get anything to trade. All right, you guys, I'll catch you tomorrow morning. Hopefully the markets will be acting a little bit more reasonable, but this is a good day to enjoy the weather, go do something with your kids, go have a little bit of fun. Make it a long weekend. Take Monday off. All right, you guys, we'll talk to you later. Bye.